Right, traders, welcome back to a regular weekly outlook on the euro dollar and the pound dollar. So this is Euro USD and GBP USD. So here we are on the weekly time frame for euro dollar. And what do we see over here right away, right? So for example, if I quickly zoom out, what we understand structurally is that we are bearish, and we have been bearish for a while. And the reason why we are bearish is because we have a structural high over here and we have a structural low down here. So this is our break of structure to the downside. So our current dealing range, if I were to quickly mark that up for people, our current dealing range, so this is our structure, dealing range, PD raise, and fair value gap, right? So for example, from here we have a structural high up here down to a structural low down here. So this is our dealing range. And our dealing range is important because it gives us our premium and discount array. So anything above this 50% level is a premium, so these POIs are in premium. Anything below is a discount, so this weekly POI is in a discount. So now that we've got our premium and discount and dealing ranges established, after that we understand we have a weekly POI up here. Again, a fair value gap was left over here to the left, so we have an inefficiency in price over here, and we have an inefficiency in price over here. So this is what validates the two POIs above and below current price action. Now, from here, we have two major draws on liquidity, right? We have a buy side draw on liquidity and we have a sell side draw on liquidity. Now, what makes these draws of liquidity? Well, it's quite simple. This structural high attempted to push down, didn't really produce any new lows, only came down to this region, broke minor structure, not major structure, which is down here. So this now becomes a weak structural high. And since then, price has tried to push up multiple times, right? And we also have a weak structural low down here, right? So this weak structural low tried to push up and failed. And we're just seeing price constantly fail from this region over here. Now, the question is, if the buyers continue to win and the bullish momentum does kick in the following week, we ultimately expect this draw on liquidity over here to be met, as well as price mitigating this POI over here. So the overall buy side target for any particular Euro USD buys is 1.151. So this POI is located at 1.151. So this is where the long-term buys are going to be targeting because we have a fair value gap in the premium. Very important to understand that. I made previous videos on how to determine bias using the 4 pillars, and these are our 4 pillars. Structure, dealing range, PD raise, and fair value gaps. These are the 4 most critical components to determining a market bias. Once we've determined a bullish market bias, it's important to determine a potential bearish market bias as well, because obviously the market can go both ways. Now, if the bearishness does continue that we've had this week, then ultimately the next target will be at least this draw on liquidity over here. So this draw on liquidity is at 1.044. 1.044. So this is currently how I'm seeing the weekly time frame. So we're not as decisive on the weekly time frame. If I were to pick a direction, if I really had to pick a direction, as we are located in the weekly discount, the chances are buyers could step in because we are in a discount price and we could seek higher premium prices relative to the structural range. Okay, so if we go down to the daily time frame now, the daily time frame paints somewhat of a less decisive picture. So what we have over here on the daily time frame is we have a bearish structure, right? So we have a bearish structural break over here. So this is a bearish structural break, and this gives rise to a bearish dealing range. So what do I mean by the dealing range? So the dealing range simply consists of the most recent swing high down to the most recent swing low. So this is our bearish dealing range. And since then, what's happened is we've been trading inside this dealing range since October 2023. So it's been pretty much a rangy sort of market, but we've had some good plays nevertheless. From here, we're literally at the daily equilibrium. So when we're at the daily equilibrium, what that means is we're not in a firm discount or we're not in a firm premium. Yes, we are in discount now, but because we are pretty close to the equilibrium, my advice would be to don't trade this pair so aggressively, conserve the risk, and take action only when we are in a significant discount or a significant premium. It's very important to understand that. So if we just dive into the charts a little bit clearly, what we see is we see price mitigating all the fair value gaps. So you see mitigation. We don't see any major fair value gaps over here. Everything's been mitigated. So what does that mean? What that means is we've built up a massive pool of liquidity just over here. So this is a daily trend line. So again, it has a lot of weight as it's a daily trend line. So one particular scenario I could see, if the bears continue to win, we could see price head all the way down to this POI before giving a reaction. So this POI is at 1.058. 1.058, and this is the POI that price could target next, 1.058. Now, if the buyers continue to win, because we did have a bullish bias going in, from the weekly time frame, if the buyers continue to win, right, what do we understand in price? Well, price, based off the interbank price delivery algorithm, seeks two things, right? Price seeks two things. The first thing it seeks is fair value gaps, or inefficient price action that's been left, fair value gaps. And the second thing price seeks is buy-side liquidity, or liquidity for short, right? Wherever there's liquidity, the markets are going to look to reach there. So we have clear buy-side liquidity above, and we have a sell-side inefficiency to the left of your screen. So with these two things in place, it's important to understand why the markets could seek higher. And if the markets do seek higher, the next expected price would be for price to get up to this POI over here. So this POI over here, again, is a premium fair value gap region that has some liquidity resting below it. And this is what makes POIs high probability and accurate. So people often ask me, how do you choose your POIs? How do you choose your POIs? What makes the POIs valid? Well, this is what makes the POIs valid. It's the fact that it leaves fair value gap, it's priced in the premium, and it has some kind of liquidity resting below it, right? Resting above it if it's a bullish POI, resting below it if it's a bearish POI. So these are the few things that indicate the overall price action. But overall, I'm less decisive on the euro dollar because it's near that equilibrium pricing. So now if we go down to one more time frame, so let's now go down to the 4-hour time frame. What does the 4-hour time frame show us? So the 4-hour time frame, structurally we are bearish, and it's important to understand structurally we are bearish. We have been bearish for a while. We've had two structural breaks over here. So we've had a structural break here, and we've had a structural break over here. So what does that tell us in price? Okay, so now it's important to understand we've reacted off a 4-hour POI, right? So this POI at the moment is holding. So it's been a relatively strong POI in terms of its strength of holding sellers. And so from here, the NFP gave us an aggressive move to the downside. Well done for those who caught that. So from here, where's the next potential target in price? So you have to go down now to the discount. So yes, we're below the 50% level. We're in a discount. Where are the inefficiencies? Well, there's one inefficiency down here, which I've marked out, but there's another inefficiency just above, which I haven't marked out at this point. So this is a fair value gap in price over here. So this over here is an inefficiency in price. That's our fair value gap over here. So therefore, this next POI could be the ultimate target for the sellers at the moment, because right now sellers are in control. This could be the next overall target. So where is that price in terms of its overall? In terms of the actual price of this POI is marked at 1.074. So let's quickly mark that out. 1.074. So 1.074 remains the bias, remains the overall target over here if the sellers continue to win. So the way that price is looking right now, this 4-hour POI that I've just marked out could be the next overall target. So overall, I am bearish on the intraday timeframe / mid timeframes until we get down to this kind of level over here. Then from here, we're going to have to reassess price. And again, we could react off this region, or indeed we could react off the extreme as well. So we have the three potential scenarios on EURUSD that could potentially play out. So now from here, if we head over to GBPUSD, again, it paints a pretty similar picture. So this is the GBPUSD time frame. And again, what we see over here on the daily time frame, again, we had bearish structure overall. So we had the most recent dealing range high and dealing range low. So let's get that marked out. So we had a dealing range high up here, all the way down to the dealing range low down here. So this is our high and low. So we have our premium up here, and we have our discount down here. Now we fill the inefficiency over here, the fair value gap over here. And what's happened since is that we've created what we call a weak structural high. This over here is a weak structural high. So this is now the next DOL, or drawn liquidity, DOL. And so what makes a valid drawn liquidity? What makes a valid DOL, right? It's important to understand that this structural high over here has attempted to head lower, has not actually broken any previous lows, because the lows are all the way down here, remember? This makes this a weak structural high. So the overall target now for GU actually is pretty bearish. Sorry, it's pretty bullish in my opinion. Now, this drawn liquidity I expect to get mitigated or swept at some point. So this drawn liquidity is at 1.289. 1.289 is this drawn liquidity. But ultimately, what we had over here is we had price giving us an extreme POI, an extreme fair value gap just over here. This is an extreme POI. And so from here, what's this POI targeted at? What's the POI? So this is 1.305. 1.305. Now, the ultimate target for GBP/USD is to target 1.305, but going down to the 4-hour now, the 4-hour time frame again paints a picture for bullishness, and I'm going to explain why. We have a POI over here in the extreme that hasn't been mitigated, and GBP/USD typically likes to mitigate the extremes. So once we've established somewhat of a correction, we could come down into somewhat of a discount over here before ultimately heading higher. So from now, my overall target on the GBP/USD is intraday sells going into the week ahead, because we had a very aggressive bearish NFP. I do expect lower prices down to somewhat of a discounted region, but ultimately the higher time frames paint a bullish picture, and so I expect the next drawn liquidity up here to be targeted over the next few weeks and months ahead. But overall, keep your eyes peeled for any potential sells. We could see sells again. If we go into more recent price action, we have a trend line over here. So this is the GBP/USD trend line, and we have a fair value gap in the discount below. So this is our fair value gap. If we quickly mark that up, again, POI that left an inefficiency, and this now is a fair value gap. So from here, now that we have our weekly liquidity, our 4-hour liquidity drawn out, and we have a potential fair value gap to target, again, what did I say about the interbank price delivery algorithm? We could see price target this trend line and head down to this region over here before ultimately bouncing higher. So this is my overall outlooks on GBP/USD as well as EURUSD earlier. So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.